The world is going through another revolution. Retail investors are just fighting back the hedge fund managers. Unprecedented. Hedge fund managers, the big institutions who once were thought to be the market manipulators or the ones to control the market, are getting outplayed by retail investors. The whole world is just pretty much looking at Gamestop stock right now, which has went up like over 1,600% within the past week. So what exactly is going on? Well, mainly two triggers. Number one, GameStop is going to be led by a new leader, and his name is Ryan Cohen. Ryan Cohen is a successful founder of the Chewy company, which is an e-commerce pet store that is now valued at around $45 billion. So this guy really knows how to take businesses to the next level. So we're really hoping to see GameStop make a fresh turnover with new CEO Ryan Cohen. And before he even joined the company, he already owns 12% of the company's stock because he has been buying up GameStop's shares. But GameStop was never a wildly successful company. They have been struggling for years to compete with the online world. Their business models revolves mainly around physical games, physical consoles and goods, while the world has been shifting towards online digital downloads. However, the pandemic has actually boosted the company's sales. So the company's doing alright. They're definitely not going under anytime soon. So this was pretty much the first trigger. The second trigger is we got whole Wall Street Bets community buying up shares of GameStop like no tomorrow. And it all started with deep effing value, who has been accumulating GameStop shares since September 2019, and it hasn't always been, and has been a really tough ride for him because the shares hasn't really been performing for the past 2 years, even though the business model is good. Alright, GameStop may not be the most innovative, most revolutionary business, but they're definitely doing alright. But what made deep effing value pouring his all his funds into GameStop is he did his research, and his research revealed that GameStop is heavily shorted by hedge fund managers. How heavily shorted? We're talking about a short interest of 139.57%, close to 140%. And the amount of shares that have been shorted is around 71 million. So that means the amount of available shares is actually only 51 million. In other words, there are more shares shorted than the amount of shares that even exist. There is 51 shares in the market, but we have 71 million shares. So we have 51 million shares in the market, but we have 71 million shares shorted. That is just insane. The hedge fund managers, obviously they can do it. They've got the funds to keep borrowing money, keep taking on more loans and credits to push this price down and increase their short positions for the past few years. And they're betting the company to collapse, even though the business is doing alright. So deep effing value went all in. He saw the opportunity, and you can see as he has been posting periodic updates on his his GameStop value for pretty much the last 2 years. He pretty much started the ball rolling. He did his homework, he did his due diligence, he shared it with the Wall Street Bets community. He tells everyone that the stock is way overshorted, the company is doing alright. It definitely needs to go back up. He wasn't always successful in getting everyone to join him, but everything just pretty much snowballed the moment Ryan Cohen took the lead for this company. With Ryan Cohen leading the company, it can probably go to new heights. But right now, this phenomenal rise in the stock prices is pretty much not based on the company's valuation or the company's earnings anymore. At this point, the whole stock is just a war zone between the short sellers and the retail buyers. Specifically, it's just a tug of war between the hedge fund managers who are shorting it and the retail investors who are just buying it to squeeze out the hedge fund managers. This is pretty much a historic event. I don't normally invest for the short term. I usually invest for the long term, but this is a once in a lifetime scene. So I got in a bit as well. I am willing to take this gamble. I'm willing to lose it, but I've weighed the pros and cons. I've weighed the odds. There's a much higher chance that the hedge fund managers get stopped out because they are now billions in debt. How high can the stock go? I don't know. Maybe based on the Wall Street Bets community, we're mostly betting on 1,000 plus. I've seen price targets as high as over $5,000. But I think this trend will definitely continue until all the short sellers are squeezed out. And to see that, we will expect the short interest ratio to return to the normal. So, the average short interest for stocks, I guess it would be around 10%. Anything beyond 20% is already considered extremely high. GameStop's short interest is 139%. 139%. Until this 139% goes all the way back into the 10% or the 20% range, I don't think this trend will stop. This whole trend will probably stop when the short interest goes back to the regular 10s or 20s. So I could easily, I see it could easily go beyond $1,000, because right now the short interest ratio is still above 100%. The squeeze has, just begun, and I think this is worth the gamble. It's kind of a short-term position. Long-term wise, GameStop's gonna do well probably, especially with Ryan Cohen leading it. Fun time, guys. I'm not a financial advisor. I'm just a simple retail investor, and I think the stock is worth the bet.